Hi, today is Sunday the 28th, and because I won't have time to record this video on Monday, I will have to stick to data available at the close on Friday, and for members of the class, I will post a screenshot with how the market reopens on Sunday night, overnight Monday morning. So what we have seen, if you recall last week, I mentioned that the market was attempting a bearish wave, but could also go back to the same trading range, and it did for about 2 days. It even hit the 31.60-65 resistance area again, and I can understand that some of you cannot really see the 40-point quanta here, 31.25, which is now turned pivot, and this range actually started to show some weakness midweek, the 24th, at the time past the 30.85 to aim to about 30.45. That's about here. It was penetrated a few times. This is why also sometimes it's difficult to really have confidence in this level. But this level, this support level actually held. It went back to 30.85. It didn't have enough momentum, bullish resilience now to get back to 30.25. So it was only a matter of time before bearishness would set in again. On Friday, we had a bout of selling. This time 30.45 didn't hold to aim for the 30.05, which incidentally on this 4-hour time frame is the first target. It is probably also reinforced by the fact that it is also 40 points lower. Now the biggest support is definitely around 29.70. Incidentally, it is also where it bounced off mid-June. Could have this kind of wave, maybe attempting to recover to 30.45, maybe even higher. You never know, because the markets are pretty wild, and we have that quarterly expiration on Tuesday. I would say that at some point the bears will try and test not only 3000 or 3000, it will also try and aim for 29.65-70 again. Bearish pressure is not really showing here in terms of energy in the market, so let's not forget that volumes are still fairly light, so we may not see much continuation. So 30.05 is probably the target. At first, I don't think it will go to 29.70. Now let's have a look at a longer time frame. On this time frame, levels are about the same. 30.25 is definitely now confirmed as a very strong support. So for those who want to hedge a delta, call credit spreads here, we don't even need to go all the way to highs earlier this year. 30.25 or 30.65, or maybe up to 30.20 is likely to hold. At the same time, this isn't just some consolidation. This is not huge profit taking. Profit taking would be definitely mean going back to about 28.15, and I don't see this happening right away. If we draw fib expansion from here, we see the first target is on 28.60, which is actually very, very close from this initial 4-hour pattern on 28.75. There again, unless there's some really bad news, I would think bearish congestion to 30, maybe 29.68 is more likely. That said, of course, if this one breaks, we would aim straight for this target. Bearishness here on the longer time frame is clearer, but at the same time it doesn't have much energy to it. All we can say is that a return to bullishness is quite unlikely at this point. Now a look at the 1-hour time frame for the short-term outlook. Pretty much the same as on the 4-hour chart. Range expansion on the downside, target on 33,000 or so. Here we have also this kind of target on 29.70. So this kind of wave should continue exactly like we've seen before. So probably a wavy type of bearish market again. And this could last with lows on 29.70 or even 3,000. This could last maybe all the way to Independence Day. Okay, that's it for now. Next video will be on our trades, and members of the class will receive screenshots once or twice during trading day. Thank you for watching, and bye.